IR these days, guys, has changed a bit, where there's still press releases and longer form things that you do. But more and more, it's about social media content. It's about YouTube. It's about podcasts.
What's up, guys? Welcome back to another episode of The Dime. I'm Brian Fields, and with me, as always, is Kellen Finney. And this week, we got a very special guest returning back to the show, Jesse Redmond. Jesse, thanks for taking time. How are you doing today?
I am doing great. Thank you very much for having me back.
Excited to have you back. Kellen, how are you doing?
Really well. Really excited to talk to Jesse, kind of talk all things California, investor, big update. How are you, Brian?
Yeah, I'm stoked. There's a lot of information we're going to break down. We're going to get Jesse to update his thesis for us, see if we can all get on the standpoint, get some little positive sentiment I'm feeling. We're going to spin this conversation today. But before we dive in, Jesse, I think it's really important. You got a new role, head of investor relations at LEEF. Can you give our listeners just a quick synopsis of what that looks like from a day-to-day standpoint?
Yeah, so it's really two-pronged, Brian. My business card says, I can't talk, it says head of investor relations and business development. So kind of two prongs there. The investor relations prong is really trying to raise awareness about the company, meet new investors, get introductions to analysts, update the presentation, update the website, and kind of do everything that's forward-facing for LEEF Brands to raise awareness about the company. And then the second piece of the puzzle is the business development side. And I think those pair really well, especially in this environment, because it's a little slower on the IR side. In case you guys didn't notice, there's less interest in investing in cannabis companies right now. So that gives me a little bit more flexibility to work on the business development side. And that could be looking for, partnerships with other companies. That could be moving into new states, like we're moving into New York, and basically finding other ways to add value to the business besides on the IR side. So those are kind of the two roles I'm straddling right now. In this environment, like I mentioned, leaning a bit more into the business development side. We can talk about the deal we got done with Glasshouse Brands, and that sunk up a bunch of my time. And that's an example of a business development deal. And then the IR side, still saying active. IR these days, guys, has changed a bit, where there's still press releases and longer form things that you do. But more and more, it's about social media content. It's about YouTube. It's about podcasts. I would consider it investor relations, what I did last Friday, which is like the coolest part of my job, which is going out and visiting our farm, which is about 2 hours away. So I drove out there, shot a bunch of content. We have an in-house guy who helps us put together some sexy reels and videos. And so, I think IR is kind of straddling, PR and social media these days. So across those, I tend to kind of flex wherever there's most need and most demand for what I can help with.
I think you put that perfectly, right? It's a kind of like a balance on both sides. But the one element I want to go back to is kind of like the storytelling element of it. Content now is so 24/7, and there's so many different ways to take the marketing approach. And I love the kind of concepts you're doing. And I want to kind of dive into the IR stuff. And when you're creating the content, do you think about the storytelling aspect and trying to give kind of like the behind the scenes look at what LEEF's doing so that retail investors or other investors have a better understanding of, okay, like the numbers are the numbers, but this is really what's happening behind the scenes?
Yeah, 100%. I think that's the right perspective these days. And even at Water Tower Research, when we had institutional subscribers to our research, it still isn't as stodgy as it used to be. Like there aren't 100-page research reports. There aren't as many just conference calls. It's more about putting content out there and short form content, video content, even things like you guys do with the reels where you can hit key messages in 30 or 60 seconds. So I think the research world is evolving, and I think to use the right word there, storytelling. And so thinking about how I spent last Friday, I started out with a friend in Santa Barbara. We shot some video to orient people about where we are, because that's kind of a landmark they could get familiar with. We got in the car, we drove to a town called Yukiyama where our farm is. We shot a bit of content in this little small western town. Then we drove a couple miles out to the ranch and got some pictures of the overhead view looking down, some video up there. We got some video of the plants. And so it really was trying to take people along that journey. And I think if you're a cannabis investor, and honestly, guys, if you're a LEEF Brands investor, I think you've been a little bit frustrated over the last couple of years because we've been in a slower growth period as we've been trying to turn this farm on. We recently announced we were entering New York. So we have a lot of growth initiatives. And rather than just tell people those things in this environment, I think it's critical to show them. And for me, I think one of the reasons LEEF was a great fit for me is not only am I based in California, but I'm also about 90 minutes from our farm. So it gives me the ability to go out there and shoot more content. So recently we've been shooting things like the planting. I was out there showing the plants about midway through their first harvest cycle. Then we'll go back out when they are harvested. go again in for the planting, and really people take people along that journey. And that's not to forget about the financial side, because obviously former hedge fund manager, former analyst, I care about the financial side, but we need to tell the story. So when the results show up, then people will say, aha, I get it. I understand what happened here. So for me, that means let's start telling the story now. Plants going in the ground, get the first harvest done, do the second harvest, see that show up on the financials. And especially guys, when third quarter financials come out, you can look back and say, oh, that's the improvement they've been talking about and have kind of been following along for that journey. So that's really my mindset, is how I approach IR. Still very much focused, on, getting, the content we need to out there, the earnings reports and the more formal things. But I do think you hit the nail on the head, Brian. It's all about storytelling these days.
I think the important element to remember is that sometimes the financials don't tell the whole picture. And now when you start to see the images like you're illustrating and people can follow along, the picture becomes way more clear. It's like, okay, the numbers are one thing, but since they don't tell the whole story, where's the other part of the story? And I think for a lot of the companies, they're missing that other element. And what you're doing now is taking people through that entire journey. And the best part about those photos and those videos that you're producing is it's easily shareable, right? People can see something really exciting and share with their friend. Now somebody who wasn't familiar with LEEF or wasn't sure what was going on now has a sticky kind of element that can say, look how cool this is. Look at the growth of this farm. Look how beautiful this is. This is right here in California.
And you also need a story to tell if we're being candid about things. There was another company that approached me about doing investor relations for them late last year. And they were a bigger company in more 5% growth mode, some new stores opening, but not a heck of a lot going on with the company. So if they brought someone in like me that likes to produce a lot of content, you could have got around to the existing grows and stores, and there certainly would have been work to do. But I think that sort of stuff you're talking about, that storytelling, think about that word storytelling. And if you look at what's happening, especially with the larger MSOs, maybe tier ones, tier twos, a lot of those stories have gotten compromised. We can talk a little bit about, a little bit more about why that is. But, the lack of, Schedule 3, the lack of Florida, the lack of Pennsylvania has really hampered a lot of growth. And so I don't know if you guys have noticed, but have you seen that a lot of those companies have been more quiet on social media? The CEOs aren't putting themselves out there anymore. So I think a good IR strategy and storytelling works best when you have a story to tell.
I also think, though, that it's important, that the story comes from the storyteller itself. Like you are writing or telling the story from a hedge fund manager background, right? So you can speak to a lot of different points that other content creators can't speak to right now.
Yeah, I think that's a strength, Kellen, but it also plays into one of my weaknesses, which is that I've never created short form video stuff like this. I forced myself. We were talking offline about the podcast and what goes into it and how hard it is to listen to yourself, and it's even harder to watch yourself. So I forced myself to get better at things like podcasting just by doing it over and over again. And when I was shooting those videos in Santa Barbara last week, I've never put on a lav mic. I just used my new iPhone that I got, a lav mic, had someone, standing there, shooting video with me. And I'm out in front of the pier in Santa Barbara saying, hey, I'm Jesse Redmond from LEEF Brands, and we're heading to New Kiama, California today. That's not natural to me. I didn't do that in my former life. And so also, guys, I'm 50 years old, right? And so I'm not like the kids who can just hold the camera up and shoot a video that gets, 1 million views on TikTok. Instead, I'm trying to find this line where I'm professional, but I'm not a total dork out there, and I'm not nervous, but I'm not trying too hard. And so I think all of those things you get better at with time. But it's been a little bit hard for me to get comfortable with this new content era. And then you also need people to help you with it. We have an in-house team who can, once I get the content together, they can put together the reels and piece it all up so that it looks great. But it's definitely been something that's been new for me to learn over the last 6 months or a year. And if you're somebody out there with a brand or a story, I found the only thing to do is just get started, just get going. Sometimes people send me a message about starting podcasts or ask about higher exchanges. And I said, we had an idea. We showed up. When I go back and listen to the first 5 or 10 episodes, I cringe. Now we're at episode, 70 or so, maybe 75. And I feel a lot better about it. I think Morgan and I have hit a good stride. But the way that we got there was by just showing up over and over again. And I think that's the same thing with that short form video content. Do you guys know who a guy named Colin Landforce is?
Yeah.
Yeah, so I don't know Colin. I just follow his content, but he kind of inspires me by saying, you never know what's going to catch, so just keep doing stuff. And that's been kind of what I've been trying to do, to not put too much out there, but to be a bit uncomfortable and say, hey, I don't know if people will hate on this. I don't know if think it's stupid, but I love it. I think it's cool. So I'm going to keep putting it out there. And, sometimes that's nerve wracking. At times it can be discouraging. Like if you guys ever worked on something really hard and it gets a quarter of the views you would have hoped. Yeah, you guys are laughing, right? Like too often, right? But then you do something.
This is going to crush. It got crushed.
But then the flip side, you probably had things which you didn't think might take off as much, and they work out great. And so I think that's just kind of the ups and downs of this modern content creation world that we live in.
Definitely. Want to shout out Colin and Cut 30, and then we can send him a bill for sponsoring the podcast. So thanks so much, Colin, for sponsoring. But I think the element that he illustrates perfectly and that you definitely brought into it is that it doesn't matter what the company or the brand is, it's how you creatively tell the story. Because one could look at LEEF and be like, it's an extraction company. How interesting could that be? How can we talk about such a complicated, challenging, boring, nuanced part of the supply chain in an interesting fashion? And how do you tell it in a story mode that does that? And I think I give you a ton of credit because most people could look at that and be like, hey, I'm not sure how to tell that story. Instead, you took the approach to say, okay, like we're going to take it from the beginning to the end so people can see the journey. And now you're taking a part of the supply chain that most would say not really a creative, fun storytelling aspect, and you're putting a brand behind it, like a life to it.
Yeah, I think that's a good observation. I think anything could be cool if you tell the story in the right way. And I think anything could be boring if you tell the story in the wrong way. And I think you need to overlay that with saying, I think in this day and age, just an element of honesty matters too. And so if you don't have something to say, don't be just out there saying shit just for the sake of saying it, because I think people see that more than ever. And I find with my content, the more I'm just myself, like there's a Gary Vee video, and Gary Vee kind of makes me cringe these days I had to unfollow him to cool off for a little while. But he had this video short form thing that I really liked. And he was saying the stuff that's getting the most traction these days are the people that get really comfortable with being themselves. And he kept saying, really lean into being who you are, really learn being yourself. And I think we see that in the podcast world where it doesn't take the fanciest production in the world. Like look at Joe Rogan for a long time. He has great production for what he's trying to accomplish these days, but his sets are always pretty low key and it's just kind of two guys having a conversation. But he is unapologetically who he is. He'll crack a whiskey, he'll crack a cigar, he'll smoke a joint, he'll be super serious sometimes, he'll joke around sometimes. And I think that's what people are attracted to because this modern era has democratized things. And I don't think we're putting people on a pedestal like we used to as much, which I think is a good thing. So I think everybody has a shot these days. But I also think that we can see through the bullshit more than ever, and especially in cannabis, right? We've been fooled so many times. And I think that when we're creating content these days, go out there and put yourself out there consistently, but also do it in a sincere manner and really lean in when you have stuff to say. So if I had joined LEEF Brands last year, we wouldn't have had as much to say. And maybe the struggle you're talking about there, Brian, with just focusing on the extraction piece would be harder. But this year, we have the farm, we have New York, we now have the Glasshouse deal. We're focused on crypto. Like we have a bunch of cool stuff going on. And so I think you need to pair those two elements together, have something going on, have something cool to say, and then lead into it and overlay that with an element of honesty and just really being yourself. And that last part is hard. It's really hard. Like it's almost easier to put on an act when you come on shows. But I found the things I've done that have got the most traction are just when I don't over prepare for it. I don't think about it too much. And I just go out there and be myself because that's what we're all looking for in each other is just to see the best version of the other person.
Has there been parts of the storytelling elements that some of the viewers or listeners kind of said to you, hey, Jesse, would love for you to expand in here? Or was there any follow-up and say, hey, Jesse, I don't really understand this. Can you elaborate more? Has there been any sort of feedback like that?
I would say that people like to see the video footage and they like to see, in our case, specifically, the farm being built. And I think that's an interesting thing for anyone to watch. We've all seen a million indoor rooms and beautiful pictures of flowers turning purple. And I think that stuff is great, kind of like the old High Times sort of look where you just have, gorgeous pictures of, amazing flowers close to harvest. But what we're doing is different in that we're doing a huge sun-grown farm and we're doing it in a big ag style at super low cost, purposed for extraction. Like we're not going to be selling flower. We're going to be purposing this for extracts. And so I think that's been interesting to a lot of people. I'd say, guys, where I've gotten some pushback is just people want to see results sometimes rather than just promises. So I wouldn't even call it so much pushback, but I have found there's a limitation in terms of what you can do in this market by just telling somebody what's going to happen. And I think that's fair. Cannabis has become the ultimate show me story. And so sometimes going back to what we were talking about earlier, put a ton of work into something about what we're going to be doing. We'll put it out there and it doesn't get much buzz. It's just because everyone's so fatigued and lost so much money, waiting for things to happen. And so that goes also back to the prior point where my approach is let's tell them what we're going to do, document that. And then when it hits the financials, we can point back and say, this is why it happened. But I'd say maybe the most sharpest, most helpful observation I can offer is that there's limits to what you can do right now just by promoting and telling people. I think what you have to do is say, I'm just going to put out the content and do the work and don't expect a ton of results, in terms of share prices or interest initially, but put in that work. Because then when the results happen, you can point back to it and people will think, oh shit, I saw Jesse talking about this all year. Now third quarter financials have come out. We're starting to see that, really, really show in the numbers.
What's been like the biggest challenge linking all the different areas that LEEF does together from a storytelling perspective? So it's like a succinct message, right?
I would say the weirdest piece that we had, guys, was the dispensary. And so in California, typically people like to be vertical. I think most of your listeners and viewers will know that vertical integration leads to higher margins because you're capturing more pieces. So if you're going to be the most vertical, you could start with growing your own flower, making your own products, doing your own distribution, selling those in your own stores, and capture as much of that margin, for yourself. And so we initially were going down that route, and we have this beautiful store called the LEEF El Paseo, which is kind of the Rodeo Drive of Palm Springs, actually in Palm Desert, technically. And that was just kind of a one-off piece where it was helpful to collect data about what products are selling and trends in the marketplace. As far as a California store, it was certainly in the top 10% in terms of maybe even the top 5% in terms of financials. So it wasn't like a bottomless pit for us financially, but it was just an extra element where we didn't have a huge team to focus on retail. We decided just to cap it at that one store and not go out and get 5 or 10 stores. Glasshouse has 10. I think Gold Flora has, or maybe had is the right term, 16 stores. And so that was kind of a piece over here, which again, financially was fine, wasn't a huge distraction, but didn't fit super well into the story. Because really where we are at our core rather, is an extraction company that wants to have control of the supply chain and use low-cost cultivation to feed that extracts business. And ultimately, if we paired that with a network of 10 stores down the road, I don't want to close the door to that someday. But just having the one-off store over here, I think was a part of our story, which wasn't a huge weakness, but necessarily wasn't a huge strength. And so that's why I think it's one of the reasons I'm really excited to have Glasshouse be taking over the day-to-day of it with a managed services agreement, is because it does clean up our story. We can focus on Salisbury Canyon Ranch, large-scale, low-cost cultivation, feeding that to our extraction business, and putting out bulk extracts that we sell through the large brands in California, and not be focused on the one-off store that we had over here. So I'd say that's the only piece of the puzzle I'd say that was a bit challenging for me from a storytelling perspective. But I love the way that story turned out, with having Glasshouse take that over. And then we got a corresponding supply chain agreement where we'll be getting a bunch of Glasshouse material as well. So the piece that was a bit cumbersome kind of turned out to be a blessing now.
Before we dive into that, because I'm very excited to ask you about that, do you think a part of the release of that dispensary in exchange for the biomass is a specialization, is a doubling down on the specialization aspect of understanding what you do best at,
yep,
and saying right now in today's environment, this is where we thrive and this is where we dominate. We should double down here and put all of our resources here?
100%. Yeah, I would say it's a couple of things. I'd say it's one is we didn't really further that initiative and get a chain, 5 or 10 retail stores. 2, Brian, is that we don't have many products under LEEF Brands. We went down that brand building road, and ultimately, figured out in California, it's super hard to build brands here. So instead, our business is bulk extraction, and then we sell our extracts to the big brands out there, the Mammoth, which is like heavy hitters, Kiva, Wild, Jetty. Most of the big companies in California are our clients. And so I say that to say, if we were producing the bulk extracts and we had a bunch of brands to push those in stores, then maybe the retail piece would have made more sense. But your point is exactly right. This allows us to specialize and also allows Glasshouse to specialize So, because Glasshouse wants to sell more Glasshouse products, one way to do that is to have them in your own stores. So it allows Glasshouse to get more shelf space and they have 10 stores. They have a whole department that focuses on retail. And so they can take that over and do a great job for us. And in an MSA agreement, for your listeners, that's a managed services agreement. And what that means is if you sign an MSA, in this case, Glasshouse manages the store on a day-to-day basis. They receive a fee for doing so for the service they're providing to manage the store, but the profitability and all the economics still flow back to us. So the idea with an MSA is let Glasshouse do their thing. We'll pay them a fee for it, but ultimately, we feel that fee is a value-added fee, and that we'll get more, revenue back from the store, more profit back from the store, net of us, paying them for that managed services agreement. So I think this one was a win-win in that way, and that Glasshouse is great at retail. It's a focus. They want to do more of it. We're on the other side. We just had the one store, not a big focus. So why don't we turn it over to an expert? And then, like you said, we can focus on what we're really good at, which is the bulk extraction and that cultivation piece.
How does a deal like that get started? Like, what's the initial catalyst? Is it like LEEF approaches Glasshouse, or like how does something like that even like get going from a conversational perspective?
Yeah, so this one actually predated me. It was kind of a warm conversation when I joined the firm. And the catalyst for it was Glasshouse identified that we had this great retail store in Palm Springs and Palm Desert specifically. And they were looking to build out their network of stores, but in a capital efficient manner to get shelf space. So rather than going out and buying a bunch of stores, they're interested in doing these managed services agreements where they get a fee for operating the store, and they can also sell more Glasshouse products in the store. And so they were interested in the LEEF. There were some initial conversations before I formally joined LEEF. And then once I joined the firm, I've had a good relationship with Glasshouse for a number of years. Graham lives in Santa Barbara where I live. The greenhouse is just about an hour away from where I am. Got to know Kyle and some other members of the team as well over the last few years. So it's an easy one for me to step in and move along and ultimately help get done, just because I had the relationship beforehand and was easy to move things. Not easy. It was a heck of a lot of work, but was able to move things forward.
Kellen, you're imagining Graham just sending out a text to you guys up. Like, I'm just wondering, like,
you never know, right?
It's probably, but I think deals like this though, and I want to get into some specifics, deals like this are the way where the industry you grow as fast as you can, try to gobble up assets, figure out what you're good at. And now what I love about this is that two strong companies going back to their core, right? Truly going back to their core, saying like, this is what we do best. Here's how we can align together with a partnership where both sides get benefits and strengthen the entire supply chain going through. And this is the type of deal that I hope continues to go forward with more companies doing things like this, because it just makes so much sense. You see it and you go to yourself like, yes, finally an understanding of like, we have this, you have this, let's make a deal work.
Yeah, absolutely. Let's dive into the second piece of this a little bit, because the MSA part was interesting to us. But what really made this deal compelling for us was this offtake agreement, or we could call it a supply chain agreement. And here's what that means. We're an extraction company, and we're out there constantly sourcing from farms. We source from 200 to 300 farms across California. We're always looking for high quality material for extraction. Glasshouse has 5.5 billion square feet of greenhouses. I think they're running over a little over 3 million square feet right now. They're putting out a ton of finished flower, and they also have a ton of trim material for extraction. And so for us, we said, why don't we do the store MSA? That sounds fantastic. But also, we love to get a consistent supply of material for extraction from you, because that'll give us extra material to be running, take the pressure off of constantly having to source from these 200 to 300 farms around California. You guys probably know this, but maybe some of the listeners don't. Procurement is a full-time job, and we have a whole department at LEEF that's focused on procurement, meaning finding material for extraction. And so the MSA piece is key, but what really was the cherry on top and made this deal make a ton of sense was the ability to get that consistent supply of Glasshouse material on a monthly basis. You guys probably know they produce great flower. That leads to great material for extracts. And so that was a piece that maybe I'm most excited about, is that supply chain agreement to get a bunch of Glasshouse material on a monthly basis. It also makes sense for them too, because they're producing more flower than ever. That leads to more trim material for extraction than ever. And so us being a consistent user and consumer of that trim, makes their job easier as well. So I would see it as a win-win on the dispensary side, but also win-win on that offtake or supply chain agreement, and that we need the material for extraction, allows us to produce more oil. And for Glasshouse, they have a consistent consumer of the material, which is great for them as well.
I think it's also like from a macro perspective, like it's kind of almost like a change of the times, right? Like unifying, strengthening instead of like this fragmentation, right? So you could say it's like the whole industry maturing to provide stability on all assets of the supply chain, if you will.
Yeah, I think that's a good way to look at it. We're complementary businesses. There's a little bit of competitive overlap, but at the end of the day, there's plenty of room for us to both win. Glasshouse being a big bulk producer of flower in California, great call option on interstate commerce, with the big greenhouse, be able to ship across the US is definitely part of the thesis in Glasshouse. Similar for us, we have a sun-grown farm. We can talk more about it, but the ability to go to 187 acres, which is 8.4 million square feet. So that gives you some perspective how big the farm can be. We're doing 65 acres this year, which is, I think, a little over 3 million, square feet of cultivation out there. But we're focused on extracts, whereas Glasshouse focuses on flower. So I think the thesis is similar, but again, they're selling finished flower. We're focused on extract production. So fairly complementary businesses, and I don't see us really cannibalizing each other. But I totally agree with your point, Kellen, and that we need more companies working together. It's a cliche to talk about being stronger together, but I think that's more important than ever in the cannabis world is how do we get deals done where companies can truly help each other? Because if we're just being super honest, guys, we all need some help right now.
Yeah. And I think, Kellen, going back to what you said, the stability aspect is so important because I don't think sometimes people realize is how challenging procurement is, how critical of a role that is, because if there's no material coming in, turns out even the best processors can't process nothing. So you need good material. And the quality aspect is so valuable there. And then from Glasshouse side, they've got all this product. And if they have a large customer like LEEF now, they now can feel comfortable saying, okay, we can expand our products and grow more, bring down our cost of materials because we've got a large scale buyer. So now everything kind of strengthens. And ultimately what ends up happening is supply chain strengthens, customers get better products at lower costs.
Resource reallocation too, right? Like how much energy is being poured into both sides, like trying to find each other.
Yep.
You know what I mean? Like Glasshouse does have a lot of material, but they got to move that material too, right? So they're like having people trying to sell it, right? So like it helps on a bunch of different like logistic ways too.
Yeah, I think that's totally true. Just like I said, we have a procurement department. They have, a whole department just focused on sales. And so you're absolutely right. Having a fixed buyer is helpful for Glasshouse as well. There's another nuance which might be interesting to discuss, which is we talk about California often having an oversupply of flower, but California actually has an undersupply of extraction material. And initially, that sounds like that doesn't make sense. But the reason for that, guys, is what passes often as flower at the pesticide level, when you concentrate it, and we're not just concentrating THC, we're not just concentrating terpenes, we're concentrating everything, including the pesticides. So many times a batch that passes for flower, once you concentrate it, won't pass at extract. So it's important in our case, not just have a large supply of material, but it has to be a large supply of clean material. And again, you could have something that's grown super well and passes at the flower level, but then you concentrate, it doesn't pass at the extract level. Then you're returning products, and that can turn into a whole headache there as well. So it's important for us not just to have a lot of material, but also to have a lot of clean material, which is more challenging than I initially understood before I got into this role.
The cost element of just like going through that entire process, getting it tested, going through it, and then realizing you've got a problem, nightmare. Nightmare.
Right.
And one where the end customer has no idea, right? Has no idea why these expenses are so high. When it turns out like, here's how these problems compound. And it gets even more intricate when you have to go back and figure out like, where did it come from? And if it comes through like environmental drift, now you've got even wider problems too. Because like now you've got even deeper issues of figuring out, okay, we can't buy material over here. Now we have to be more focused, which just kind of layers on to the challenges this whole entire industry faces.
Yeah, and usually it is coming from drift, Brian. Like when people hear you talk about pesticides, they might think that the farms themselves are doing bad things, but often it can be from somebody making blueberries down the road. And so yeah, I don't think people are necessarily trying to put pesticides into things, but there is a lot of drift, especially in California.
And it's cool because they like to move the stake, right? Like the rules change every 2 to 3 years for the cannabis industry in California, right? Like they add different levels and they're like, now it's these pesticides. So like it makes it even harder to do that whole like, track tracing thing. It's it's definitely a super sensitive subject, probably for a lot of operators in California. Yep. The pesticide thing is big.
Jesse, how long does a conversation between LEEF and Glasshouse go from, I know it predated you, but like how long a process? Is it like 6 weeks, 6 months? How long would something like that take from like start to finish?
Let's see, we closed the middle of this month. So that was, so I would say 4 or 5 months, somewhere in that range. Initially, we arrived at a term sheet, and then after that, you negotiate the actual MSA agreements. And even from the term sheet to the MSA agreement was another month or 6 weeks, just because there's a tons of details to nail in these contracts. So I would say overall, maybe it was like conservatively a 4-month process, but maybe that's, could be even a little bit longer than that.
Are there other conversations with other partners that you think LEEF could explore, if you can share that? And then if not is there other, let's say, alignments of similar partnerships that you think outside companies should consider partnering up with?
2 good questions there. So nothing specific we're looking at for LEEF in the near term. We have our hands full with these, different initiatives this year. Number 1 is the farm for us. Number 2 is New York. We made some advances in extraction technology. Now we have the Glasshouse deal. We're looking to put more Bitcoin on our balance sheet. And so our hands are really full. So I'd say we're not looking for projects right now. I would say longer term, we haven't talked about it, but we are entering New York this year. So that'll take us from an SSO to an MSO. And I think longer term, we'd like to enter a new state every year or 2. So I think that's one way that we could expand. Or maybe there's a world where there's another MSO or another operator that's great at what they do on the cultivation side, on the retail side, but needs help with the extraction business. And maybe there could be some sort of a deal with a larger MSO or something like that to help them with the extraction business. Because, we're in California, and Emily Paxia often says, cannabis in California is like training for a marathon at altitude. And I think that's very true. So I think there's a world where we could take some of our SOPs and best practices and things we've learned competing in California and making some of the best extracts in the state, and take that same, knowledge and skill set to New York, which we're doing, and next door is New Jersey. Illinois is a healthy market. Florida could be interesting down the road. And so I think expanding nationally further is definitely on our radar. And strategic partnerships are definitely of interest if somebody is an MSO or somebody has the cultivation and retail, and we could help them out on the extraction piece. So nothing explicitly, but always trying to be mindful about where opportunities could come up.
The extraction side, again, I'm just going to keep hammering this. People don't understand how nuanced and how complicated and how challenging it is to do it successfully and to do it continually successfully. It is so complicated, and your team is able to do this. It's really impressive. And that is a USP, right? When you go to these other states and you say, okay, like we're going to go toe to toe or do the same material, there's going to be significant differences there. So I give your team a ton of credit for that. And then the best benefit of going to a state like New York is that a lot of your companies and partners there are already in New York, and they're like, hey, we could really use our trusted supply chain partner here because we're trying to make really consistent, great products. Do you guys want to come? And then making that decision about going to New York, a lot easier because you're not going to a new territory and having to find a bunch of whole new customers. A lot of your customers are already there. So like, we're just looking for this partnership to continue.
Yeah, New York was a great fit for us. Our CEO, Micah, was on a few weeks ago, maybe a month or so ago, and I think he talked about this a little bit. But New York is kind of the opposite of California, in that you have high prices, you have healthy margins. Extracts are used in 52% of products in New York, so even more than in California. I think California, it's about 48% of products, and in New York, it's even bigger. The pen market there is huge. The edible market there is huge. The infused pre-roll market is huge. And so we decided to move out there. We liked all of those traits, and we said, let's do this in a real CapEx light manner. So let's not go out there and raise $10 or $15 million and build some 15,000 square foot extraction facility. Instead, we had just upgraded in California, so we moved our California equipment, which was still great, but we are using some higher capacity equipment here now. So we shipped that out to New York. That's in a pod there waiting to be installed. We're going to lease a facility out there in New York rather than buy something and spend a bunch of money. So we're entering the New York in a real affordable CapEx light manner, which we can scale further in the future. But then, Brian, what you said there was right on, which is that we also have the brand partners out there. So the ones that are killing it in California, your Kivas, your Wilds, your Jetties, your Mammoths. I don't know that all of those are in New York, but I think listeners get the idea that a lot of our biggest brand partners in California are out in New York. And they're saying, hey guys, there's a shortage of great concentrates. We love your stuff. So as soon as you get set up here, we'd love to start placing some orders. And so I think, guys, if we look back at some of the mistakes in the industry, it was expanding too quickly and too widely at the same time, especially in some of these states that are waiting to flip adult use. Like, I think that's kind of one of the things that is sinking air, is they had such big expansion into medical markets waiting for adult use flips, but then those didn't happen. And so now they're sitting there with, PA, not at its full capacity. They're waiting for, Florida. Who knows when that's going to happen now. And so we've tried to learn from those mistakes and let's not get too aggressive in a new market. Let's go in a little bit CapEx light. Let's go there knowing who we can sell stuff to. And then we can have a great year one, but really start to scale more in year two and year three. And ultimately, we hope that New York becomes, as big or bigger for us as California.
No, I think that's like the perfect example of it describing that, right? You're not going to be the first person into the market, but you kind of like slingshot through like the second and third portion of it to where all of a sudden you're at the top. And they're like, well, when did they even join here? We didn't even see them start. And you're like, well, it's because like we took it slow. We understood what we wanted to accomplish. We made sure our customers were ready to rock. And we came in light and we just let it rip.
Yep.
So what other elements of kind of like that same theory strategic plan that you talked about of like being strategic and going in asset light, what other elements is LEEF doing or that you're seeing other companies do that you think is not getting enough credit from an industry standpoint?
I think there's limited options right now, Brian. I could have stalled there for like 30 seconds and tried to think of them, but I think where we are from an industry perspective is that we're struggling with growth. And when we're on talking late last year, I went back and listened to the first half hour of the episode a day or two to get ready for today. And I had to stop because I was cringing because we had so much optimism and hope around how things were going to change. And last year, we thought Florida was kind of in the bag, right? Like I think people, 90% of people, even 95% of people I knew thought Florida was going to happen. That didn't happen. Pennsylvania, we keep hoping is going to happen. We were thinking that could be a Jan 1 start of this year at one point, then push back to middle of the year. Now we might be into next year. And then add on zero political progress, maybe even arguably a step back with the delays in these ALJ hearings. We don't know really what's going on with Schedule 3 right now. And so I think the industry is struggling and a lot of businesses feel stagnant. And so one of the big challenges we have is the tier 1 MSOs, your Curaleafs, your Veranos, your Truliefs, your Crescos of the world. Those businesses are expected largely to grow mid-single digits this year. I think for some of them, it might be even lower than that, like flat to single-digit growth. And so in that environment, if you're looking to boost EBITDA and ultimately boost cash flows and one day net income, you have limited levers to pull. So more and more what I see companies doing is focusing on the G&A line and focusing on interest expense and focusing really on survival. And so I think that's why you haven't seen many creative deals out there is businesses feel a little bit handcuffed. A lot of companies don't like their valuation right now. So doing deals when you're at a low valuation sometimes isn't ideal. And so, yeah, I don't have a great answer to your question, but I would say that I think that the problem now is that we're in low growth mode broadly as an industry. And so if you think I have limited levers to pull for growth, one thing which I'm happy to talk about is people, going into the hemp world because that's one opportunity for growth. But until we get some of these states to flip, until you get a Pennsylvania to turn on, let's say that's early next year, just to be conservative because everything takes longer than we expect. That's one lever, and that'll help most of the larger MSOs. Minnesota doesn't really move the needle, and that just keeps getting kicked back longer and longer. That was supposed to be spring of this year. Now we're talking spring of 26. And from a public perspective, GTI and Vireo are poised to benefit from that, but largely not a huge needle mover for the MSOs. And so we're kind of left looking at the farm bill and looking at hemp and saying, what will happen with the farm bill? Do we want to dip our toe in that water? Might they close that loophole, which could drive more revenue back to the state legal stores? That's kind of one lever for growth. But when I look across the whole industry, what I see is kind of mid-single digits growth, broadly speaking. And if you look at businesses expected to grow, 10, 15% or more over the next couple of years, it's a pretty short list. And you have to look for people that have, bigger pieces turning on. And so for us, we're one of those companies because we have the farm, because we have New York, because we have the advances in extraction technology, we have the potential to be, growing, at 20 or 30% over the next couple of years. Glasshouse, another example, they're turning on more greenhouses. Looks like they're going to dip their toe into the hemp market and the THCA or farm bill flower market. That's another example. Grown Rogue is a third example. They have the core businesses in Illinois and Michigan, and now they're moving into New Jersey and then Illinois. Another one I can think of is Planet 13 through the VitaCan acquisition. It doesn't quite count. It's a little bit different than organic growth, but that's another one that may see double digits type growth. There's probably a couple other names I'm missing out there. Maybe High Tide, they're opening new stores. And there's probably a couple others that I missed out there. But the point of it is, I know we are in a low growth environment. And I think that's handcuffing people a little bit. And so if I see some creativity or really forward looking efforts, I think they're more focused on survival right now as opposed to creative growth. And I don't think that's because people don't realize they need growth. I think it's because they really don't know where to find it in this environment. I mean, look at the people you've had on the show, Charlie, Jason Wild, Boris, Kim, these are all really high IQ, smart people. And if they thought they knew how to find double-digit growth the next couple of years, they would do it. But sometimes cannabis looks like what Abner from Ascend calls a stair-step growth pattern, where it goes flat for a while, new states flip on, it goes up, goes flat, and goes up. And right now, we're just in one of those flat periods where I think people are focused a little bit more on survival and cost cutting and less on growth opportunities, which sucks broadly for an investor if you're an MSOS or you're just broadly investing in the cannabis industry. But I think where the opportunity comes in is that people are painting cannabis with one brush, saying everything's broken in cannabis, nothing is growing, we're never going to get reform. When in reality, you have a basket of higher growth companies where the baby is getting thrown out with the bathwater, and they have a path to meaningful financial improvement. And if we were to add on some sort of reform, let's say Schedule 3 gets done, for example, I think we're going to see some of these stocks, double and triple over the next couple of years. But more than ever, you have to be selective. This is no longer a buy the basket market. It is a stock pickers market.
Yeah, that was perfectly said, and just kind of going through exactly like how you illustrated all the way back from the beginning of the optimism that we had. And I did too listen to that, thinking we might have been a little too optimistic, but it was hard not to be. I mean, you were like, there's very low likelihood that we get smashed in all those spaces, but in all honesty, the board broke terribly for us and it didn't work out. But the final point you said about being selective, I think it goes back to specialization. I continue to believe that companies are looking inward and saying, okay, if nothing changes for the next 5 to 10 years, what do we do better than anyone else at? What can we compete head to toe in one single category? What do we do better than everyone else? And I think there's some companies out there that don't have that are still trying to figure out, maybe we can do this, maybe we can do this, maybe we can do this. And none of those things kind of fit in their core narrative. And the approach that I'm looking at is the companies like LEEF, companies like Glasshouse that say, this is what we do better than anyone else. We're going to double and triple down on those elements because this is how we are going to not only be able to survive, but to thrive when the tides kind of change and we all move in a different direction.
Yeah, we're going to look back one time and say we were too conservative in our views, but literally every interview I've done the past 2 or 3 years, I've been too optimistic. And I've tried to tone it down. In my heart, guys, I'm a huge believer in the destination. I don't think the destination has changed for cannabis. I think the time under which we reach that destination has changed. And I think we talked about last episode, this notion of there's a fine line between being early and wrong, and we're walking it. And I don't think we were wrong about the destination. I think we get to Schedule 3. I think we get to safe banking. I think we get the federal legalization with interstate commerce. And I think we get to higher exchanges. Great podcast. Don't forget to listen.
Good plug.
But that opportunity does change if you extend the duration under which it happens. So if those things happen in 3 years, your stocks are going to perform a lot differently if those things happen in 10 years. And I think the reality we're seeing is that political progress is almost impossible to predict. Think back to November, December 2022, I think. Do you guys remember when SAFE was going to be in the NDAA?
Yeah. I think it was running rampant on Twitter.
Yeah. And the stocks, were up 50, 60% over a few weeks. And apparently that really was going to happen. And I talked to somebody that was, at a political event, and they said they were there at the last minute when it got canceled. It was in, and then it got taken out. So that wasn't taken out, but that wasn't BS. But it just shows how hard it is to predict these things. So I retired from political predictions in December of 22, and that's been a fantastic fact. My life is way less stressful. I'm wrong way less.
Pelosi to start buying the cannabis stocks, and then we all feel like we got this locked in, guys.
Yeah, so I think there will be a time, where we look back and we say, oh, we were so down, we were so out. And historically in my life, I've been pretty good at reading contrarian signals. Like I'm old enough that I started my investment career in 97. I was at Fisher Investments in San Francisco, and that was when the tech bubble burst. And I learned a lot from seeing that tech bubble burst. And then I learned a lot from seeing the pieces of the puzzle get put back together, and some companies surviving and becoming leaders and new ones emerging. So no one talks about pets.com anymore. No one talks about Webvan anymore. Even that big networking company called Cisco, that was the darling back in the day when I was just getting started. No one talks about them anymore. Now it's your NVIDIAs, your Apples, your Googles, your Netflix. I don't even think Netflix was a thing back then. And so I think that analogy might play over into the cannabis industry. But what's hard is that in order for things to turn around here, we need two things to happen. Number one is we need some political progress. I think everybody listening knows that. And so if and when we wake up one day, we do see some progress, I think you can see momentum switch pretty quickly. But as a company and as an industry, we need to make it to that day. And then number two is that's not enough. You need growth along with it. So late last year, I'm at Water Tower Research, having some conversations with big mutual fund companies, big small cap growth funds, and they were interested in cannabis because they saw those two things coming. They saw unlocking value from political catalysts, and they saw growth on the horizon, especially from that Florida flip, but also hopefully Pennsylvania back then as well. And those are the two pieces they liked because they paired that with terrible sentiment in an overlooked sector. Where we are now is we have the terrible sentiment. Like, guys, I've never seen worse sentiment in my investing career. And now we're getting even past the point of hate. And the opposite of love, they say, isn't hate, it's apathy. And if you just look at engagement numbers, like you guys do a podcast, I'm sure you're still putting up great numbers. But some of us in the podcast world, have seen less interest in the last, 6 months or so, just because the space, the space has been so depressed. And so the sentiment contrarian indicators are going off. Like how many analysts have left the space? Not just me, but guys like, Owen Bennett, Scott Fortune, goes all the way down the list. So there's only a handful of analysts left. That's a contrarian indicator. Down 95%, that's a contrarian indicator. 3+ year bear market, that's a contrarian indicator. Valuations, that's a contrarian indicator. But those aren't enough. We have that piece. Now we need to add the other pieces. We need growth and we need some sort of political progress. And once those come together, that's the recipe for the stocks to really start taking off. But I think the reason the industry is hard right now is, broadly speaking, we don't know when those are going to happen. We don't know when the political reform is going to come because it's so hard to predict, and it's proven so hard to get done. And then on the growth side, again, it's a little bit of a political progress because we have Florida, which needs a vote, and they have that supermajority of 60%, which has proven super hard to get. And then Pennsylvania's, going through this legislative process. And those are just two states to talk about, but that's kind of what goes on in every state. And so I think that the way out of this is through pairing this horrible sentiment with the things that pull us up, which are the growth and the political reform components. It's just a matter of getting to that point. And when we do get there, there's going to be a fantastic opportunity. But I have zero idea if that happens 3 months from now or 18 months from now.
I think that's perfectly illustrated. And I think sometimes when things are the hardest, this is the opportunity point, right? Like this is the part now where the next set of successful companies is being built. And maybe for some people, it's not obvious, but I think for others like ourselves, it's very clear the changes that are happening and that the right companies are growing and they're investing in the infrastructure to take advantage of the next wave when it happens and are preparing to survive given the tumultuous times we're facing here. So Jesse, last question for you. What question do you wish more people asked to you?
Where will we be in 10 years? And that's because I think most people's time horizon is far too short. So I'm really take who's the younger of you two guys?
Kellen.
And how old are you, sir?
35.
Okay, so you're 35 years old. Yeah, boo. So Kellen, you're 35 years old. If you think about how long you have to be an investor, sometimes people get this wrong and they say, well, when I'm 60, I'm going to switch to bonds and I'm going to start getting income because then I'm going to retire and then I'm going to sell all my stocks. I think you're going to do great, Kellen. I think by the time you get 60, you're going to look and say, I have money and I'm going to want to pass some of that on. I'm going to want to have growth into my retirement years. And so for most people, their time horizon is a lot longer because you have 30 years until you retire. But then after that, you have, let's say you live to 95. I'm optimistic for you. That's 30 more years to live off that income. And then I think you have a great family. You're going to pass it on to your kids and they might live another 100 years. So I can put together a pretty easy story where your time horizon is like 100 years or longer with your money. And so when we're looking at cannabis, we're always focused on, what's happening next 3 months, 6 months, what happens in the next year. And this goes back to that notion of the destination. And so I think it's important to talk about what's going to happen over the next 3, 6, 12 months, especially when you're a company focused on what the strategy is. But I think if you're an investor, I really encourage people to look at this with a longer time horizon. The path is there. The path is that we need things like Schedule 3, safe banking, federal legalization eventually. That gets us interstate commerce. And then we get to the real exchanges, the NASDAQ, the New York Stock Exchanges. That's the path to getting to where we want these companies to be from a valuation perspective. And then you think about the growth side of it. We currently have 24 adult use states. Eventually, we'll get to 35, 45. Eventually, hopefully, we can get to all 50 adult use states. And that's a ton of TAM to unlock. And now we're not even talking about the global component either, which is getting to be increasingly important. So I still think there's a ton of opportunity in cannabis. And I think the best thing for an investor to do is not just to put money into something and close their eyes and say, I don't need to look at this for 10, 15, 20 years. Be mindful of the companies in which you're investing. Look for strong balance sheet. Look for companies that have long-term growth opportunities, but do so with the mindset of what really is your time horizon and give this time to play out. I don't know that we get to all those boxes we want to check on S3, SAFER, higher exchanges, federal legalization, all of that in the next 3 to 5 years. But if we look out 5 to 10, I think we do get there. And I think even under that 3 to 5 year window, we can check a lot of those boxes, make a lot of progress. So I guess to answer your question, Brian, I wish people focused at the longer time horizon and thought about what the opportunity was, because this is still something coming out of prohibition. Like, this is super hard and awkward and clumsy. Like, everything about cannabis is hard and weird right now, but it kind of makes sense that it's hard and weird because we're coming off prohibition. We're going to be threats to a lot of industries, whether that's tobacco, whether that's alcohol, whether that's pharmaceuticals. There's a lot of pressures trying to hold us down. But I think eventually, boom, we break through. We get treated like everybody else. We move some of the shackles, new states turn on, and I think these businesses eventually thrive. And so maybe the one thing I'll leave people with is to focus on really what is your time horizon, extend your time horizon, and look at companies with balance sheets to survive and growth opportunities to drive more revenue.
I love it. I think it's perfect. And Kellen, think about your grandkids. So Jesse, for our listeners, if they want to get in touch, they want to learn more, and they want to buy a LEEF stock, where can they find you?
Oh, you could buy that LEEF stock on your local OTC exchange or the CSE. It's LEEF or LEEF, depending on the exchange. So I encourage you to check that out. Our website is leefbrands.com. If you want to connect with me, you can find me on socials at Jesse Redmond. Or if you're still an email person, shoot me an email, jesse@leefca.com.
And the podcast.
Oh, yes. Sorry, Morgan. I do a podcast every week, or most weeks anyway, with my friend Morgan Paxia. That is called Higher Exchanges. The last time we talked, we were doing that still in a Spaces format, live every Thursday at 1 p.m. Pacific on X. But we made the upgrade, partially inspired by you guys at the Dime. Now we are on video, so you can find us on YouTube under Higher Exchanges. And we're still recording, usually at 1 p.m. Pacific, live on X, live on LinkedIn, live on YouTube. But we do so with video and proper microphones, and that's been a huge boost. People seem to like it, and it's much better production. So appreciate that. Please do check out Higher Exchanges.
Thanks for taking my time. This was a lot of fun.
I appreciate it, guys. Thanks for having me back my second time. I'm going to book early so I can get a third time on before the next year.
I love it. Talk to you soon.
All right, guys.